The first real decision every Florida buyer makes isn't which house, it's which loan you use to buy it. FHA, conventional, VA, USDA. And here's the honest truth. There is no best loan, only the best loan for your situation. I'm Ryan Solberg with MaxLife Realty, and let me line all four up side by side in plain English. Four loans, four very different fits. The right one comes down to five things: your credit, your cash, your military status, where the home is, and the price point. Here's how they stack up across the basics. Conventional first, it isn't backed by any government agency, and for buyers with solid credit, is usually the most cost effective. As little as 3% down for qualified buyers, best pricing around 740, and it's the only one here that also covers second homes and investment properties because the government loans are primary residence only, best for good credit buyers who want the flexibility to drop that mortgage insurance later. Now, FHA, the door opener. It's insured by the Federal Housing Administration, and it exists for buyers who might not qualify for conventional. 3.5% down at a 580 score, and it's more flexible on debt to income, which really helps when Florida's high insurance costs stretch your ratios. The catch: FHA mortgage insurance usually lasts the life of the loan unless you put 10% down. That's why a lot of FHA buyers refinance into a conventional loan later to shed it. VA. If you've served, this one is often the single best mortgage available, full stop. For eligible veterans, active duty service members, and many surviving spouses, zero down and no monthly mortgage insurance. That alone saves hundreds a month. The only real cost is a one-time funding fee, which can be financed, and it's waived for many veterans with a service-connected disability. Central Florida has a huge military community, and I make sure every eligible buyer looks at their VA benefit first. And don't sleep on USDA, the most overlooked option of the four. Zero down with one condition: the property has to be in a USDA eligible area. Plenty of Central Florida outside the urban core qualifies. Parts of Lake, Osceola, and East Orange. Your household income has to fall within the limits, generally up to 115% of the area median. And one more, because this is Central Florida. When you move into the luxury tier, you cross the conforming loan limit, which has been running around $806,000 and adjusts every year. Above that, you need a jumbo loan, 10 to 20% down, stronger credit, more documentation. Here's the biggest mistake I see people make: picking the loan that sounds best instead of the one that fits. And in Florida, there are two wrinkles that trip buyers up. One, condos. FHA and VA usually require the building to be on an approved list, and a lot of Florida condos are not. Conventional is more flexible there. Two, insurance. Every loan requires homeowners insurance, and our high premiums raise your monthly payment and your debt to income ratio, which can change which program you even qualify for. Don't fall in love with a condo before you confirm it can be financed, and line up insurance quotes early. So here's the framework I actually use with buyers: great credit and want flexibility, conventional; lower credit or thin savings, FHA, and plan to refinance later; eligible veteran, VA, almost always; moderate income and open to rural, USDA, buying luxury above the limit, jumbo. The single best move is to get pre-approved with a lender who will run your real numbers across all of these and tell you, in dollars, which one wins. I wrote the complete version of this, every loan type, credit scores, the condo and insurance gotchas, over on the blog. Links in the description. And if you want help matching the loan to your life, instead of a headline. That's exactly what I do. Call or text me at 321-373-3536 and I'll connect you with a trusted local loan officer who can map your options.